Oh, we should get some music going here. What is going on, everybody? Today we're talking about the San Diego housing market, and specifically we're going to go deep on the Goldman Sachs article that says they're predicting a housing market crash comparable to the 2008 housing market crash in 4 U.S. cities. And one of those cities, if you can believe it, is San Diego. Another one is Phoenix, Arizona, which is really cool because I brought on my friend, Caitlin McKee. I'm sorry. How do you pronounce your last name? My God. I always say it, and I know I'm saying it wrong. Dang it.
It's McKeag. It's
McKeag.
Yeah, McKeag. It's easy.
All right.
It looks like McKeag, but McKeag is easier to say.
Well, thank you so much for being on today. You are an absolute rock star. You, like myself, have a YouTube channel about real estate, but obviously in Phoenix, not here in San Diego. And you honestly, I talk to a lot of agents around the country that have similar assets and make similar content, but I think you kind of stand alone as going really deep into analyzing what's going on with the market. And so I'm really, really excited to have you on today. And everyone that's out there listening, like ton of value that you're going to get out of this. I promise you.
Well, thank you. I'm excited to be on. Thanks for having me.
So I am going to share here. So this is Caitlin's channel. Go ahead and follow her at Your Phoenix Real Estate Agent. Tons of good information. And you actually went over exactly what we're talking about today, because this is an article that I probably had about 10 different people forward over to me. I don't know about you this last week.
Yep.
This is absolutely going around. And the question really is like, is this clickbait? Is there truth to this? And I think both of us we're the kind of people that we're not just going to say things because we're real estate agents and we're trying to get business. We try to provide value. We try to have a really good analysis so that people can make the decision on their own. And I know that we're going to get into a lot of detail on this one.
Yeah.
For anyone that is tuning in, throw in the comments, where are you tuning in from? We always like to know, because I get people from all across the country that get tuning into these lives that we do. And sorry for the delay today. We had a lot of technical difficulties today, Caitlin. What happened? What happened with that?
It's the week. It's the vibe of the week. Everything's been just a little off this week for me, at least.
Okay. Well, it's nice to know it's not just me.
It's probably my fault.
Well, I don't believe it, but I appreciate that. So let's go ahead and get started here. And I know you're very familiar with this article and what's going on. But so Goldman Sachs said 4 cities are likely to see a 2008 style housing market crash. They had a whole report, and then a bunch of different news stations put out articles on this. So kind of what they're talking about is, I'm starting to hear a little bit of an echo over there, Caitlin.
Oh.
There are more technical difficulties, if you wouldn't mind putting your headphones on. So basically what they're talking about is a housing market crash. They're kind of defining as a 25% drop in median home price and home values. They're not predicting a nationwide drop in home values. If you actually read through the article here, they're basically just saying that these are the areas that they believe are the most inflated. And it's specifically San Diego, Phoenix, Arizona, San Jose in Northern California, and Austin, Texas. So it's pretty interesting to go through their whole analysis here. And they also go on to say that, let's see. Oh, they go on to say at the very end, which I thought was an interesting kicker, is that there's going to be a 10 to 15% price drop in 2023 in total. So they start by saying 25%, and then at the very end they say 10 to 15%, which I think you can agree with me, Caitlin, is probably not as significant as the 2008 style housing market crash, which here in San Diego County dropped over 40%.
Yeah, I think Phoenix was 60%. So yeah. 25 would be a breeze.
Yeah. And it's wild. How much have prices come down, or median home value come down out in Phoenix so far?
14%.
Okay. So we're 13% here since May of last year is when we really peaked.
Since May. Yeah, exactly. Well, what's interesting about this is they actually, I think initially, this was their revised prediction, right? So their initial prediction was that values were going to increase this year by, I don't know, 3% or something. I can't remember exactly what their initial prediction was. And so then they came out with this, which is slightly confusing because they say values are going to increase and then go down by 25%. And I'm like, how are they going to increase in this climate right now significantly enough to make a difference and then go down by 25? I had a hard time following it. I don't know if that was just me.
I agree. I feel like it could have been a lot more thorough, and they even went on to say places like Chicago and New York they're going to see price increases. So I don't really know how they're calculating one versus the other. But I know that you and I both have an intimate feel as to what's going on in our markets, and something I say time and time again on these episodes is like, it's good to follow the data, and we want to follow the data and see what's going on there. But at the same time, if we're looking at closed home sales, it's usually talking about closed sales of last month, which means it was an offer accepted 2 months ago, which means the data we're going off of is 2 months old. And so actually seeing and we'll at the very end of this, we're going to get into like what we're actually seeing right now. But it sure as heck seems like the start of the year kind of picked up a lot compared to what happened last year.
Mm-hmm. Yeah, it definitely did. I also think it's really hard to make any predictions on a national scale. And I think a lot of these cities that they're calling out are just ones that had some massive growth.
Hmm.
And so, it makes sense that we have some to give back. I can totally agree with that.
Yep.
But I just, unless you're really analyzing the data and operating in that city, I think it's very hard to make any sort of, I mean, no one makes an accurate prediction, let's be honest. It's too
Hmm.
hard, whether it's interest rates or the real estate market. But I just think it's really hard to look at things on a national scale and just piece out like, oh, this city is going to have this issue, this is going to have that, without like actually operating in the city, because there's so many nuances to different markets.
And I think also the problem there is there's so many people out there that just want prices to come down so much that they're going with that feeling over actually putting out some data and saying what is going to be the catalyst for that. Like there's no doubt the reason prices have come down 13% is because mortgage interest rates shot up like crazy and affordability went down. So now that we're seeing that starting to stabilize and even come down a little bit, that kind of points more towards the opposite direction, if anything, for me.
Right. Well, isn't that what they said in that article that that rates would end at like 6.5% at the end
Hmm.
of 2023? Well, I don't understand how that in effect is going to crash the market when we saw an increase from 3 to 6.5 to 7 last year.
Yeah.
We already did this jump and we've seen the prices be affected by that, but we're not at this catastrophic number yet. So it was just a little bit confusing. 6.5%. Great. Already seen that.
Yeah, exactly. And I have so many thoughts on that, but I get called out a lot. Well, maybe not a lot, but I get called out sometimes because people want to see some more data, some more information. So let's actually look at some of this. This is median sales price in San Diego County. If you look in 2008, January of 2008, this is all property types, single family and attached properties. We're at $445,000. And January of 2009, $267,000. So a drop of just over 40%. And then, so this is basically what's happened. It's steadily increased the entire time until, of course, the beginning of COVID when things shot up in May of 2020, and they've come down around 13%. So this is kind of how the year has gone. Again, we've already seen a drop of 13%. So then if we're seeing another 10% on top of that, of course, homeowners don't want to see that. But that would bring us to about 2021 numbers. It's kind of hard to say that is a massive 2008 style crash in my mind.
No, not at all. That's probably still more appreciation than what you would see in a normal, like if we were in 20 or if we had not had this huge run up.
Yeah.
If we go to 2021 prices, it's still more than what we would have seen compared to 2019, 2020, I think. Anyway.
Yeah, I totally agree. And if I like to look at the inventory because looking at homes, how many homes are for sale? What's supply and demand? Very simple. What is it supply? What is the demand? And if you look at the amount of homes for sale, this is the biggest thing that doesn't get talked about enough is how many homes are currently for sale. Right now in San Diego County, we have less than 3,000 homes for sale in a county of 3.35 million people. I mean, it's absolutely bonkers. I talked to friends across the country who are in different markets, and like, it's kind of hard to beat that, those numbers right there. What does your market look like right now?
We have very low inventory as well. I don't know as compared to the population, but our inventory levels are much lower than they've ever been historically. When you compare it to the last 2 years, it looks like we have soaring inventory.
Yeah.
I think we have somewhere around like the 18,000 range of homes on the market, which we were seeing like 5,000 this time last year. So it's a pretty drastic difference. But in 2008, we had over 50,000 listings.
Yeah.
So it's not even in the same realm. Plus, our population was less at that time, so the difference between people to number of homes on the market was drastically different.
Yeah. It's easy to compare from the last 2 years because inventory got so low that it looks like things have shot up. But if you look on this chart right here, this goes back to 2012. This is San Diego County active listing inventory. Otherwise, how many homes are currently listed for sale? And, kind of the sweet spot, the 3-year rolling average before COVID was right around 7,500, 8,000 homes for sale. And I wish this chart went back a little bit farther. But again, if you go back to like 2008, 2009, 2010, the amount of homes that we had in San Diego County was closer to 30,000. So that's literally 10x of where we're at right now. And I don't just say that to say, hey, that's where we're at right now, but where the heck are these extra homes going to come from? I mean, if there is going to be a massive style crash in our market, there has to be different catalysts for it. It either has to be on the supply side or the demand side. There's no way it's going to happen on the supply side because there's not enough new homes being built. There are no foreclosures. There are very few distressed properties. I mean, all the charts that you look at for all this stuff is crazy to actually look at.
Hmm. Yeah, I did a TikTok on our foreclosures here in Phoenix the other day, and I mean, the just looking at the bar graph, it's hilarious. It's like the most minimal number, and those are pre-foreclosures too, because in Arizona you have a 90-day period to bring your payments current or sell the property. So
Yeah.
that's not even an actual foreclosure yet, and but yet it says foreclosures are up 200% or whatever, and it's like yeah,
Yeah.
because we have 200 of them and we had zero before.
Yeah, that's one of the craziest charts to look at. I'm going to see if I can pull it up over here. But while we're doing that, we're going to say hello to some of our friends. Misha Thompson, what is going on? We all know that California is overinflated. Don't be upset just because you can't afford to live here, Misha. That's not our fault. Okay, no, I'm just kidding. Misha, good friend over in Warner Robins, Georgia. Juan Felipe Gonzalez, what is going on? JF, good to hear from you. Hello from Birmingham, Alabama. Do we have a timeline expected for this? So as far as the Goldman Sachs article, if that's what you're referring to, it's their prediction for 2023. So unless Caitlin, is there anything else that you picked out of that as far as the article?
That's what I understood by end of 2023. I think that at some point they mentioned a little of 2024, but it was pretty near term for the most part.
Okay, cool. Thanks for tuning in, JF. I know we're going to be helping you find a home later on this year. It's always nice to hear from you. So it was a drop of 13 plus. What 2023 will bring on the table? Great question. And I think, Caitlin, we might both be a little bit confused on this. So he's asking, they're saying a 25% drop. Is that including what's already happened? Because that's how I'm reading it.
Right. They said peak to trough, but then at another point in the article, they say home prices will see an increase and then a massive decline.
Okay.
No.
All right. So best we can give for you, JF. And Keisha said, hello, new agent based in San Diego. What is going on? Thanks for tuning in. Good to see you. All right. I'm going to see real quick if we can find this chart over here for foreclosures. This is great. Dead space. This is what I like. Sorry. Okay, here we go. So I have, this is distressed listings. So how many properties are being listed that are distressed and basically need to be completely renovated? Back in 2012, we had 1,600. Right now, we're at about, I don't know, 4. I don't know how to read that chart, but essentially nothing. So this is really, really interesting. I guess I'll also argue on the other side of this is that a lot of these distressed properties aren't even hitting the market because there are so many companies in San Diego that flip properties. That's why there's so many renovated properties that they're sending out mailers or knocking on doors. They're trying to find these properties before they hit the market. So I think that could have an effect on this number that we're seeing right here. But it is true. If I have a client that reaches out and says, Dan, I'm looking for a distressed home that we can flip, you're going to have a hard time finding it on the market. Not a lot of them hit the market. That's kind of what we see. All right. Well, I can't find the foreclosure one. I'll bring it for next time. How's that sound?
Yeah. Yeah. That sounds good.
The other thing that we need to look at too is unemployment. So is that something that you've been taking a look at as well?
Yeah, I do talk about that on my market updates because that's a huge factor in what will happen. Obviously, if we have a lot of layoffs and people losing their jobs, that's not a good situation for mortgage payments. That said, I think a lot of people have very low mortgage payments because of the rates. So even if you didn't buy in the last 2 years, you likely refinanced at some point. So I still don't see that being the catalyst to a major crash, but it certainly is something that we have to pay attention to. And there's been a lot of layoffs lately, especially in tech. Retail sales are down. So, the reality of a recession is definitely here. I just don't see it being as drastic as they like to make it sound. People losing their jobs, it's never good. But I do think that it will be a mild recession.
Yeah, I mean, we're giving it some realistic perspective here. Is it possible we might head into a recession? Yes, absolutely. And there's some real signs that is happening. There were just a ton of tech layoffs. We're starting to develop a tech sector here in San Diego. A lot of the jobs that I personally saw that they were having layoffs was mostly in the Bay Area. Although I heard today, I haven't actually seen the data myself, but somewhere around 1,000 jobs from Amazon were cut here in San Diego. So that's definitely going to have an effect on things. But yeah, I mean, overall, so I think that this is interesting here. So San Diego, as far as the other large metro areas, is actually doing really well when it comes to employment or unemployment. And we actually have, out of all the large metros, we have one of the lowest levels of unemployment. So that is, I mean, for us, selfishly, it's really good. I don't know about how you're doing out there in Phoenix. And a couple of different articles that I was pulling up today about this. So San Diego unemployment rate drops even lower. So far here in San Diego, I mean, majority of the mass layoffs we've been seeing are these big tech companies. And then the thought kind of is, did they expand too fast? Like what exactly was happening there? It is a very real thing that is going to have an effect on people's livelihoods and could continue down the line, but something we're going to have to kind of keep a close eye on, I think.
Yeah. Yeah. I don't remember the last number that Phoenix was at for unemployment, but I'm pretty sure we're back to pre-pandemic levels and it's been hanging pretty strong. So Phoenix has been okay so far, but I know nationally we've started to see that rate tick up.
Yeah, absolutely. Okay. So the last kind of thing that I wanted to talk about, we can't talk about the housing market without talking about Jerome Powell and what's happening with the Fed funds rate. And this is something that I know you dive into very heavily on your channel is Federal Reserve. We're going to find out some more information. Tomorrow morning?
Tomorrow. Yep. Tomorrow's the day.
So, and then what's the anticipation here?
25 basis points.
Okay. And do you think that is going to have a positive or negative effect on mortgage interest rates?
I think it will have a neutral effect. I think that's what everyone's anticipating. So if that's what happens, I don't think we're going to see much movement in rates. If they do something different, then that could probably affect it. But it seems like if it just kind of stays to the expectation, then there's not a whole lot that will change mortgage rates.
Yeah.
There are some other, I think, jobs numbers come out on Friday. There's a handful of economic news coming out this week. So that could affect rates depending on how that goes.
So I think a lot of people that watch this channel probably have a better idea of what's going on because they're doing a lot of research and how the Fed's fund rate affects mortgage interest rates. But it never fails. I mean, I've been on 3 listing appointments that every single one, they were talking about how the Fed funds rate is going to be increased and how that's directly correlated with mortgage interest rates. And it's just not how things work. So I'm happy that you said that because the reality is if we pull up kind of the mortgage interest rates and what's happened over the last couple of months. So this is a site that I use that doesn't want to work properly. There we go. Oh, okay. Doesn't want to work properly for me. Technology, huh?
One more thing.
And one more thing. So the Fed's fund rate has been steadily increasing this entire year. But if you look at mortgage interest rates, they actually came down in November and they stayed pretty steady. And that's still kind of the expectation after what we find out tomorrow, you know, depending on what Jerome Powell says. But it sounds very likely that it's going to stay steady, potentially go up a little bit, potentially go down a little bit, but it's not going to be directly correlated or directly increase mortgage interest rates based on what we hear.
Right. Mortgage rates are tied to bond yields more than they are to the federal funds rates. So it's not, one goes up, then mortgage rates go up, but it's more of like a market reaction. Again, I'm not a mortgage lender, but this is what I understand from all my research and my mortgage friends. But it's, it's like a stock market. When certain things happen in these markets, then rates react accordingly. And so if things stay at expectations, then we don't see a whole lot of movement. If things go crazy, rates can go up and down. So, but I do know they're tied to bond yields much more directly than the Fed funds rate.
So we're taking a look at all this data that we're going over as far as supply, the demand, the mortgage interest rates, the Fed funds rate. We're not talking about anything here that is directly saying, hey, there's going to be a crash coming. So it's pretty interesting to look at all that stuff. We're going to get into our personal experience here in 1 second. They just want to get through these comments here. So JF says, excellent, thank you. And Garrett says, Oceanside is the biggest gem in San Diego County. Do you agree or disagree? Caitlin, what do you think? You agree or disagree?
I'm not the expert on that. I don't know. It sounds like a great place.
Yeah, it is, I think, the most underrated coastal community here in San Diego. Garrett must be watching my stuff because I've made several videos talking about how much upside I see in Oceanside. So I'm a huge, huge fan of Oceanside. All right, so let's talk a little bit about what are you experiencing in Phoenix? You are an active real estate agent. You have active buyers, active sellers at this moment in time. What has it been like since things started to slow down in May, and how has your year started?
The year has started off hot and fast and busy, and I was taken aback, I will be honest. I was like, am I ever going to get another phone call in like November and December? And things just slowed down. May, everything kind of fell off a cliff in May and June, which of course is when I got a bunch of listings, none of which were selling because everyone was scared. And I was part of the number of listings that just ticked up here in Phoenix. But yeah, it was very slow. And then things started to recover a little bit. I think in the fall, people started to get back out there, come to terms with where the rates were at, be a little bit less fearful. But that like May through July timeframe was really like a shock here in Phoenix. I don't know if it was the same for you.
Yeah, it was. I mean, a lot of my colleagues in the industry here in San Diego County, they sold around 30 to 40% less last year than they did the year before. And a lot of that, it basically, once May hit through the rest of the year, it just was crickets. But here's the interesting thing. I mean, we showed inventory. We showed how many homes are for sale. Sure, demand was down, but supply was down too. People didn't want to sell their homes to get a higher interest rate. They didn't want to have to go through the process. Everyone just kind of froze.
Yep. Yeah, it was very interesting to see. And thankfully, that is what happened, because otherwise we would have seen a crash if everyone decided to sell and no one wanted to buy. So all those interest rates, I think, kept us, the low interest rates kept us from seeing something like that. But there was, for the first month or two, there were a lot of panicked sellers that were like, this is the end of the peak. I need to like cash out. And, but then ultimately they never ended up selling because they didn't get their price. And they were like, yeah, I'm fine here. So it was kind of like a false supply spike, maybe.
Yeah.
Never really thought of it like that. But as I'm saying that, I think that's kind of what happened. But yeah, January, it sounds like the same has been happening to you. It's just been like calls every day from new people that want to buy, and buyers are getting off the fence. I was in a multiple offer situation this weekend, or yesterday. from the weekend through yesterday. And I was telling my clients, like, I have PTSD, like, I can't do this again. What year is it?
Is it? Don't you
So,
feel like just terrible for telling your buyer clients, "Oh my gosh, there were multiple offers." Like every
yeah.
single offer I've written so far this year has been a multiple offer scenario. They haven't been going for 100,000 over asking. That's not what's happening because buyers are still reluctant to like really push the envelope like that, which is a good thing. I mean, you and I both, we don't want to see that happen again, but every single property we put an offer on ended up having multiple offers that we had to in one form or another compete with.
Wow, that's crazy.
Yeah.
It's not that hasn't been my experience. I've had just one of those and one at the end of December actually, and that was really because they very much underpriced the house, so they got a lot of traction, but this one this weekend, I got 4 offers and I was pretty surprised about it. And of course this happens 3 weeks after I tell my buyers, it's a different market than last time you purchased. We don't
Yeah.
have to like waive your contingencies. We won't have multiple offers. And then here we are like, okay, so do you guys want to counter your own offer and go higher? Because we're not the winning one right now.
Yeah, it's tough. I
Yeah.
My kind of experience so far this year has been so for one, consumer confidence is like at an all-time high. Now, this article didn't help that. I think a lot of people saw this article come out and they're like, "Ooh, maybe I should be concerned about buying a house." But here's one metric that I can use. 6 months ago, 4 months ago, anytime I would make any post, whether it's on YouTube or Instagram or TikTok or whatever, about the housing market, saying that the sky is not falling, that the market is not crashing, I would have 1,000 trolls writing comments about how what an idiot I am and I'm just a real estate agent trying to sell homes. The last like 4 or 5 posts I've made have had 0. And I know that's kind of like a silly metric, but this is the reality is what I'm seeing out there and what I'm hearing from people all around, not just inside of our industry, but from consumers, is that they don't think a crash is coming. They see things stabilizing. They see interest rates starting to come down. And that I think has a huge effect on things. It's like you said, it's like as soon as the year started, the floodgates opened. Now, I think a lot of that is just people over the last 6 months that have kind of wanted to buy, but were hesitant because of the market, that they were just ready to go on day one on January 1st. And maybe that will mellow out a little bit. But generally how it goes throughout the year is, yes, of course, like November, December is when the amount of activity in the market is always the least. It usually goes down a lot. And then it slowly starts to go up. And I think usually what we say is like right around Super Bowl is when the market really starts heating up again. Well, this year it seemed like January 1st is when things started to heat up again, which is a little bit irregular.
Totally. Yeah, same thing happened here. It was wild, very unexpected, and it might taper off. But I'm also getting some calls from sellers that are like, well, there's a lot of bad news out there. Maybe we should think about selling, before things get worse.
Sure.
So I'm interested to see if this is going to affect the supply situation a little bit, especially the Goldman Sachs prediction, because there's been a lot of talk about that. And I don't know, maybe that's getting sellers off the fence thinking like, oh, we really are going down. Maybe I should do it while at least we're like, doing okay. So I don't
That's a good
know.
point.
Yeah, it'll be interesting to see.
All right. Anthony says, "Hey, Dan and Kaylin, we're moving to San Diego this summer. Do you have an idea of when it would be a good time to buy?" Anthony, I don't know if you just tuned in or not, but that's kind of what the whole episode has been about. Kaylin, do you want to give just a quick synopsis or an idea for him?
Well, I don't know your market as well as I know mine, so I'm not sure when the best time to buy in San Diego is. But in Phoenix, it sounds like we're kind of similar markets. We have the most listings available in that like March and April timeframe. So
Mhm.
in terms of your choices, that's a good time. Summer slows down for us a little bit in Phoenix because it's so darn hot. You guys may not have that situation in San Diego, but in Phoenix, you can be one of the few buyers out there during the summertime, and then everything kind of tapers off in the fall.
Yeah. No, that's almost dead on. Just, I would say I would push kind of it back 1 month here in San Diego. So like April, May, even going into June can be the biggest months for home sales. So it depends what your good is. Is your good that you want to get the best possible price? Then I would probably start looking now, and I would just I wouldn't be so I would allow myself to be flexible. Give yourself some time, wait for a perfect opportunity, or start putting out some feelers, some offers until you get a good price. If your good is you want to have enough more homes to choose from, then that's going to be April or May. But you have to know that demand is going to be higher as well. So you're going to be competing against other offers. So take the good with the bad. And nobody knows exactly what's going to happen, especially in the next 6 months. So, I mean, we can't tell you exactly what's going to happen and base a decision off of that. I will say, I told Caitlin earlier in this episode, my wife and I have been looking for the last 8 months, and we just got an offer accepted this morning. So we're not afraid to go into this market right now. Yeah, we're very excited and nervous and all the things, just everything that every buyer out there is feeling. But that hopefully can give you guys a little bit of confidence and know that what I'm saying, I'm not just up here saying these things because I want you to do something. I'm saying these things because I believe it. If I were afraid that the market was going to crash, we wouldn't have bought a house right now. We would have waited for the market to crash. So we're not too concerned about that. So let's see. I don't even remember how I got off on that tangent. Hopefully that answered your question there, Anthony. If you want a more customized approach, obviously you can always reach out to me. I'm happy to help. And JF wanted to know what would trigger a time to buy now for you guys. I think I mostly answer that question. I think it's going to be different for everybody.
Yeah, I think so too. And that's really what I tell people, which is not always the most helpful, but like you have to look at your situation.
Mm-hmm.
And if it's a good time for you to buy, if you're buying something that's a primary home, if you have a longer term time horizon to be in that house, and you can afford the mortgage that you're getting into, even if you have a job change, then it's a good time to buy, because more than likely, if you own that house for 5 years, 7 years, 10 years, 30 years, it's going to appreciate some. You're not going to lose on it. The only time you lose is when you have to sell at a time that is not a good time to sell. So just make sure you're in a situation where you're never forced to sell. And in order to do that, you need to, feel comfortable financially. So that's what I tell people. If you're waiting for the deal of the century, probably going to miss it, because by the time we hit the bottom, we're already on the way up when everyone realizes it. Just like when we were at the peak, when everyone realized we were at the peak, prices were already coming down. So it's really luck if you're trying to time it. There really isn't a good way to be very accurate with timing the market, unfortunately.
Yeah, it's the worst advice ever to try and time the market one way or another. But I'll also throw this in there, which is just makes it even more confusing, is what if, what are you looking for? Are you looking for a lower monthly mortgage amount, or are you looking for a lower purchase price? Because those two things are not synonymous. Guess what's probably going to happen this year? And I'll get your opinion on this as well, Caitlin. But I believe in 12 months, mortgage interest rates are going to be lower than they are now, enough so that hopefully my wife and I can refinance our house. We're not banking on it. We're not that's not the only way we can make things happen. But I think that is a high likelihood. And the reality is, if rates do come down a full percent, 2%, anything significant, then home prices are going to come back down, or I'm sorry, go back up. That's the correlation. That's why we're in this situation in the first place. Rates went up, so prices came down a little bit. And if the reverse happens, I don't see any other way but for home prices to continue to go up.
Yeah, that's right. And that's a good point. What are you trying to achieve? Do you want that lower home price, or do you want the monthly payment that you can afford? Because those mortgage rates make a huge difference. And I just did this on my video a couple weeks ago, talking about is now a good time to buy, and showed the difference in monthly payment at a mortgage rate that we had a year ago with prices that were 13% higher, and then a mortgage rate that we have today with prices that are lower. And it was I think a $600 a month difference at a lower price point, but a 6.5% mortgage. So you kind of choose how you want to pay, I guess.
Yeah, choose your good. And let me ask, so $600 a month, but what is the purchase price on that house? Because I have to imagine it's fairly different than a home price in San Diego.
Yeah, our median right now is $412,000. It was $475,000 in May.
Okay. So I see things right now as, if you were to buy a house right now, you're buying it on a discount. I know if you're looking back probably 13, 14 months at this point, that it's basically going to be flat, but we're still down 13% from the peak. And my prediction would be that, 12 months from now, the median home values probably going to be above what it is right now. Although it could be up, it could be down a little bit. It doesn't really matter that much. I just don't see it being so big either way that it's going to have anyone go back and wish that they did not buy at this point. And that kind of makes sense.
Yeah, I agree. If you plan to be in the house for a long time, it doesn't really matter all that much. As long as you can afford that mortgage, that's what's important.
All right, you guys. Make sure to follow Caitlin for all of your Phoenix real estate needs. Check out her weekly market report on Mondays. And she has some buttons down there to like schedule consultations, all those good things. Of course, if you ever need to buy or sell a home in San Diego or curious about your home value here, check out our home calculator down below. Happy to help. Thanks so much for your time, Caitlin. I really, really appreciate you being on, and we'll see you next time.
Thanks for having me on.